Security Analysis is a seminal investment book written by Benjamin Graham and David Dodd, first published in 1934. The book is widely regarded as one of the most influential works on the principles of value investing and security analysis. Graham and Dodd's insights have had a lasting impact on the field of finance and have laid the foundation for the development of modern investment strategies. The book is divided into 6 parts, each covering different aspects of security analysis and investing. Part 1. Survey and Approach. Graham and Dodd set the stage for the rest of the book by emphasizing the distinction between investing and speculation. They define investing as the process of analyzing securities to determine their underlying value and making purchases when the market price is significantly lower than that value. Speculation, on the other hand, involves making bets on price movements without a solid foundation of analysis. The authors stress the importance of thorough security analysis to protect investors from potential losses. Part 2. Fixed Value Investments. Chapter 3. Earnings and Stability. Graham and Dodd begin the examination of fixed income investments by discussing earnings and stability. They highlight the significance of consistent earnings for bondholders and introduce the concept of covering fixed charges, the ability of a company to meet its fixed obligations from its earnings. Chapter 4. Dividend Record. The authors explore the importance of a company's dividend history in assessing its stability and financial strength. They analyze various aspects of dividend policies, including consistency, frequency, and coverage by earnings. A long and consistent dividend history is seen as a positive indicator of a company's financial health. Chapter 5. Earnings and Dividend Coverage. In this chapter, Graham and Dodd delve into the analysis of a company's ability to cover its dividends with earnings. They introduce the dividend payout ratio as a measure of this coverage and emphasize the significance of retaining earnings for future growth. Part 3. Senior Securities with Speculative Features. Chapter 9. Convertible Issues and Warrants. The authors shift their focus to convertible securities and warrants. They discuss convertible bonds and preferred stocks, which can be converted into common stock at a predetermined ratio. Graham and Dodd provide guidelines for evaluating these securities, taking into account their intrinsic value and potential for equity participation. Part 4. Analysis of the Income Account. Chapter 12. Earnings Smoothing and Income. Graham and Dodd explore the concept of earnings smoothing, where companies manipulate their reported earnings to appear more stable. They caution investors to look for signs of manipulation and advocate for a conservative approach that considers normalized earnings over time. Chapter 14. Depreciation and Depletion. The authors delve into the treatment of depreciation and depletion in financial statements. They explain the importance of understanding these accounting practices and their impact on a company's financial health and profitability. Part 5. Analysis of the Balance Sheet. Chapter 19. Intangible Assets. Graham and Dodd discuss intangible assets, such as patents, trademarks, and brand value. They stress the need to evaluate these assets cautiously, considering their impact on a company's competitive advantage and ability to generate future earnings. Chapter 20. Other Assets and Current Assets. This chapter examines various categories of assets, including current assets. Graham and Dodd provide guidance on evaluating these assets' value, liquidity, and role in supporting a company's operations. Part 6. The Analysis of the Income Account and Balance Sheet combined. Chapter 32. The Theory of Common Stock Investment. In this chapter, the authors bring together the concepts from earlier sections to outline their theory of common stock investment. They introduce the idea of value investing, where investors seek stocks that are trading below their intrinsic value. Graham and Dodd emphasize the importance of margin of safety, buying stocks at a significant discount to their intrinsic value, to protect against potential losses. Chapter 33. The Selection of Common Stocks. Graham and Dodd conclude the book by providing guidelines for selecting common stocks. They advocate for thorough research, including analyzing both the income account and balance sheet, as well as qualitative factors such as management quality and industry position. The authors emphasize the importance of comparing a stock's price to its intrinsic value and warn against overpaying for potential future growth. In summary, security analysis is a comprehensive work that lays out the principles of value investing and security analysis. Graham and Dodd cover a wide range of topics, from fixed income investments to common stock selection. Their focus on thorough analysis, conservatism, and the concept of intrinsic value has had a lasting impact on the field of finance and remains highly influential in modern investment strategies.
As we conclude the summary of this captivating book, we've delved deep into its intricate characters, heart-pounding plot twists, and thought-provoking themes. The journey through these pages has been nothing short of remarkable. But remember, this is just a glimpse into the rich tapestry that the complete book offers. To fully immerse yourself in the author's world and experience every emotion, every revelation, I encourage you to pick up a copy of the book and embark on the full adventure. And if you've enjoyed this summary and crave more literary insights, thought-provoking discussions, and exciting book-related content, don't forget to subscribe to our channel. By subscribing, you'll ensure you never miss out on our latest explorations of literature's hidden gems and popular favorites. Thank you for joining us on this journey, and we look forward to sharing more captivating stories with you. Subscribe now and let the exploration continue.